Hello, investors! If you keep up with financial news, you've probably heard of the S&P 500, the NASDAQ Composite Index, and the Dow Jones Industrial Average. Have you ever wondered about the differences between these indices? Or which ones to invest in? In this video, we'll take a look at the differences and why these indices are known as indicators of the state of the market on any particular day. NASDAQ Composite. Established in 1971, the NASDAQ Composite is a capitalization-weight index with more than 3,000 equities as members that are weighed according to the market caps of the individual firms. It includes almost all companies listed on the NASDAQ Stock Exchange. The performance of the composite is a good indicator of the NASDAQ exchange's performance, which, in turn, is a good indicator of the performance of the technology sector. This is due to the fact that the sector accounts for almost 50% of the index's entire makeup. According to data from September 2021, the top 10 corporations tracked by the index were all titans of technology and accounted for 46% of the index's entire weight. The NASDAQ Composite's worth has increased along with the status of the technology sector. For instance, the NASDAQ Composite soared to around 5,000 in March 2000, during the height of the dot-com bubble that devoured tech companies at the turn of the century. Soon after, it fell by more than 4,000 points, and it took 15 years before it once again reached 5,000. In 2021, the market stock boom brought on by the pandemic drove up tech values once again, and the index's value soared, hitting an all-time high of around 16,057 in November 2021. S&P 500. The S&P 500 is a market cap weighted index of large cap firms, similar to the NASDAQ Composite. Its 500 members represent a wide range of businesses from various industries. When compared to the NASDAQ Composite and the Dow, it is seen to be a stronger indicator of the market's performance overall. The S&P 500 tends to be more volatile than the Dow, which is a drawback of including more sectors in the index. Because of this, it may see greater profits on days when the market performs well and greater losses on days when the market declines. A corporation must meet specific quantitative requirements in order to be listed in the S&P 500. These prerequisites include having a market value of at least $14.6 billion, being extremely liquid, and having at least 10% of its outstanding shares in the public float. In January 2022, the S&P 500 hit an all-time high of around 4,796. Dow Jones Industrial Average. The oldest of the three indices is the Dow Jones Industrial Average, which was founded in 1896 with 12 members. The Dow, as it is commonly called, has the fewest members with only 30 components. The Dow is a price-weighted large-cap index, which means that the daily stock prices of the companies that make up the index determine the Dow's total worth. As a result, the value of the Dow will be significantly impacted by a stock with a high price. The Dow is regarded as a blue-chip index since it monitors the performance of significant firms that are well known and are believed to make up a portion of the U.S. economy. As of August 2022, the Dow featured stocks in 9 different industries, from energy and finance to information technology. Dow's selection criteria include both quantitative and qualitative elements. As a result, it contains businesses that have a solid reputation in their respective fields and have a track record of making money over the long haul. The number of businesses that can join the index is constrained by the emphasis on qualitative considerations. The NASDAQ Composite and the S&P 500, in comparison, offer a larger coverage universe that aims to include numerous firms in various industries. Due to its chosen composition, the Dow is not necessarily a reliable indicator of the state of the market or of the American economy. For instance, In a market that is rising, it is possible that investors would occasionally switch from known brands to growth firms that might not be included in the index. The S&P 500, which has a greater number of firms, will see greater gains at such times than the DJIA. On January 4th, 2022, the Dow reached an all-time high of 36,799.65 points. Let's recap the differences. These indices differ from each other primarily in three ways. The first one has to do with their coverage area and the index's core sectors. More firms from more industries are included in the NASDAQ Composite and S&P 500 than in the Dow. The second difference is the selection methodology utilized to pick the index members for each individual index. Comparatively to the other two, the Dow is more value-oriented and applies a mixture of quantitative and qualitative criteria to decide whether to include a particular stock in its index. The last distinction is how they weigh the various firms in their index. The Dow utilizes each member's stock price to calculate its weight in the index, as opposed to the NASDAQ Composite and S&P 500, which weigh their constituents based on market caps. So, which is the best investment? The index valuations in the three industries are closely connected. Consequently, the three usually rise or fall together. But for each index, the size of gains or losses varies. Your approach and goals will determine the index you choose to invest in. The S&P 500 is your best option if you want to profit from market gains across a wide range of stocks. The Dow is a fantastic option if you're looking for a secure approach that closely tracks price changes in reputable blue-chip firms. If you want your portfolio to be more concentrated on the technology sector, consider investing in a NASDAQ Composite-linked product. Hopefully this video has provided clarity between these three indices. Please like and subscribe to the channel for more content on investing.